Welcome, everybody, to another episode of the Real Estate Investing Talk Show with your hosts, Sherwin G.
And Tyler J. What's up, everyone?
You had a little pause again.
I know, because I always keep thinking about which way to point. Anyways.
Yeah, it's right. Anyways, what's on today's show, Tyler?
Well,
it's pretty exciting, right?
Today we chatted with our friend Kenny, who is doing crazy, amazing things in the real estate space. Literally by now, he's merging kind of the crypto world with the real asset of real estate. So I think, Kenny and I met a couple of years ago, same with Sherwin, and he's always been kind of a serial entrepreneur. And his newest project now is called Closin, which is a new platform, not launched yet, but should be this year soon, where literally anyone can invest in a property and essentially transact and get equity in that property via cryptocurrency and tokens. So super cool episode with Kenny about his history, starting from just his first single family rental in Huntsville, Alabama, to growing his portfolio to now kind of building this new platform called Closin. So
it was a great episode. I learned a lot coming from someone like me who know nothing about the digital currency world and want to learn more about it. And super excited because now it's tied to real estate, which what I know. So maybe makes me feel more comfortable to kind of learn more, invest in this deal or not. So
yeah, great
episode. So hope you guys enjoyed the episode.
Yep, enjoy it, man, or enjoy it all.
Hey, Kenny, welcome to the show. How's it going?
Yeah, doing great. Appreciate being here.
Great.
So I'll just do a rewind real quick. So Kenny and I met through, we'll call it an online platform called Facebook. Basically, the history of how Kenny and I met, I posted something about real estate on Asian Hustle Network, and that's run by our friend Brian Pham, who also Sherwin and I know, and that's how we met. But I think, Kenny, you reached out to me and were like, hey, dude, like I'm half Japanese, half German. I'm also interested in real estate. Let's chat or something like that. Was that kind of what happened, Kenny?
I mean, we're pretty much twins. That's been established, right? So I had to reach out to my twin.
So anyways, I just want to reiterate the power of for everyone that's watching, all millions of you guys. All it takes is a message or a phone call, and then you can start a cool connection and a relationship and maybe a business partnership down the line. So anyways, that's how I wanted to kind of start. But Kenny, thanks for...
Yeah.
Oh,
no, sorry. No, it's funny. Coincidentally, I met you through a meetup that I think Brian Pham of Asian Hustle Network was running at that time.
Basically, so Brian is the key factor.
He's the key. Yeah, he's the key factor. And then through you, I met Kenny, and now both of you guys invested in one of my deals. So it's kind of like you connect the dots. And Tyler, we met like over 2-3 years ago. That was a pre-pandemic days. Remember those good old days?
I was right before the pandemic. So
yeah.
And now we're all involved in literally the same deal too. So that's pretty cool in real estate. But I think the biggest thing is, one thing I want to talk about really today is, first of all, Kenny is essentially starting or has started a new platform called Closin. And it's really interesting to me and you, Sherwin, and I think a lot of people that are in this space, but it's merging basically, we'll call it the crypto/blockchain world with real assets such as real estate. So I think that's a really cool topic and progression of where investing in real estate is kind of going potentially. And obviously, Kenny, I know you're hoping this is the direction it keeps going, but definitely wanted to just talk to you kind of about what your new platform is and what the company is, and kind of a lot of different tangents about that. So I don't know where we want to start, other than maybe let's kind of back up and kind of go to Kenny first about like your experience in real estate. So like, what is maybe a little bit of a high level description of kind of what your experience in real estate has been, and when did you get started, where do you invest, that kind of stuff.
Yeah, so I live in San Jose, California, so it's pretty expensive here for real estate. I wanted something that was cash flow positive, and you probably couldn't get that easily in San Jose or the Bay Area, at least. So I started investing in 2019 or so. I started investing in Huntsville, Alabama, which, unless you already know about real estate, you probably have never heard about Huntsville. But it's actually the #1 fastest growing tech town in the US as of 2018, I believe. But it's a pretty techie town within Alabama. So I invested there in 2019, bought my first one then, bought my second one the next year. And then now I have 5 single family residential properties in Huntsville. Fun fact is I have not actually visited Huntsville in person. It's all been virtual. It's all been remote. So yeah, I mean, as far as I know, I could have just an empty plot somewhere that is, being used for illicit activity, but I'm getting money from it.
You're getting money.
Still coming. Yeah. I'm kind of closing my eyes, just if I don't ask questions, it keeps bringing me money. So, but yeah, all jokes aside, it's been doing pretty well for me. Cash flow properties, good appreciation too. Have one deal with both Tyler and Sherwin in Sacramento, but I've always been really interested in the idea of passive income, and I think real estate is one really great way to do that. And that's kind of how I came to real estate to begin with.
Mm-hmm. Oh, that's great.
Well, I was going to say, Sherwin and I were just chatting right before this call too, and he was like, we were talking about how some people love to collect cars, some people love to collect sneakers, some people love to collect, I don't know, Gucci bags.
Pokemon cards.
We all like to collect real estate. I think that's a great hobby to have. So,
absolutely.
But it's been cool because I think when we first talked, Kenny, you may have had one deal under your belt, or maybe it was one deal. And so it's been fun to kind of watch you progress through literally the last year of, growing that portfolio. And every time I talk to you, it's like, oh yeah, Tyler, I got 2 more properties, or hey, Tyler, I bought 3 more things in Huntsville, or hey, Tyler, I'm starting this new crypto real estate investing platform. So it's been fun watching you kind of progress through the last year or two.
What's crazy, you started 2019. That was your first time where you and it's like 3 years later.
Less than 3 years, dude.
Yeah, so you can do it. But then I guess before, I know some of our listeners are like, well, how did you start investing? Or like, what I guess, what'd you do before that, or what's your sort of your background, or sort of like going background now behind that? How'd you afford to get your first deal, and then consequently your next couple of deals? That's always a question that everyone's always wondering about, right?
Yeah, good question. So for me, I was supposed to be an accountant. That's what I studied in college, but didn't like that too much. I even quit my accounting job before my first day, instead to pursue my own.
Wait, you quit before your first day?
I had an offer. Right. I interned at this place
That's freaking awesome.
And I had an offer for when I actually graduated. But yeah.
So does that count as actually quitting if you didn't even start?
Oh, no. I accepted it though.
Okay.
But I think it was 3 weeks before my start date, I decided to put in my 2 weeks notice.
That's funny.
Or a 3 weeks notice, I guess. But
did you actually go to the office though for 2 weeks?
No.
Okay.
But I interned there for the summer before.
That's right? So funny.
Experience with them, if you count that even. But anyways, I was always interested in doing my own thing. So during the last semester of my college year, I started some Instagram marketing, Twitter marketing service. I grew that throughout college, or the end of college, and then after my first summer after college, I grew that. It was doing pretty well. Then I sold that business in 2018 for nothing too crazy, but a decent amount for myself at the time. I used the funds of that to start another company, which leveraged my existing experience with my previous company. This new one was a graphic design service called Design, which was a flat rate graphic design service. The customer would sign up for our service, and then for a monthly fee, they would get a subscription essentially to a dedicated designer that they could use for website designs or social media or videos or anything really. It's a competitive designer, right? So kind of making graphic design into a productized service, essentially making a service into a product effectively. So I grew that business to about 60 people on the team, then sold that business in 2021, pretty much a year and 1 month from today in the past. And ever since then, I've just been investing more into crypto, real estate, stocks, just trying to diversify my funds and get more passive income. That's always been my strategy, is to get more passive income, and real estate I think is one of the most effective ways to do that.
Did you have a graphic design background when you started that business?
No, not at all. But I knew how to hire these people and how to manage these people. So my skill set was more so like the management aspect of that. But no, I'm not a designer, and don't have that experience really.
It's crazy. Hey Tyler, you and I could probably use that graphic design video service right now.
I know. I was gonna say, right? We need you now, Kenny. But I think one of the things that I always admire about you, Kenny, is like you just said it from the start. Like you never really had a full-time job. Like you graduated college, and obviously entrepreneurship is not for everyone. Some people need and want that consistent paycheck and that 9-to-5 job and the health benefits, right? But I think as investors, we all have the thought of entrepreneurship and business building. And so I think that's kind of how we, first of all, a lot of us bond, is just we'll call it more risk takers in a way. But I do admire the fact that you've never really I always talk to you, Kenny. I'm like, I can't believe you never had a real job, Kenny. But I love that about you, dude. And that's also, I think, a transition to like, now you have time to, build companies, and you've built successful companies already, and you invest in real estate for passive income. But now, I guess without that 9-to-5 job, you have so much more time to dedicate towards other projects. So I think it's kind of a good transition to Closin. And also maybe before that, what have you been kind of doing the last, since you sold your last business? It's been, you said, a year and a month. Have you been working on this new business Closin the last year or so, or has it been kind of like trying to find what that next project is, or what's the last year been like for you, I guess?
Yeah, Closin was only more recently, within the past maybe 2 months or so, I would say. But yeah, since then I've been just kind of focused on real estate, like acquiring more properties. I know it's relatively kind of passive, but it still takes kind of some time to do that, to kind of purchase and find the properties and all that, and do the loans and all that. But yeah, my main focus has been like, what can I spend my time on? So I've been like tinkering with different ideas, tried some past projects that didn't work super well either. I even started to get into residential appraisal work too. I have one good friend, which I told you about, Tyler, previously, but he was making, which I know it's going to sound crazy, but he was making like $90,000 per month as a home appraiser. Just in the Bay Area, appraising homes. It doesn't sound like it would make sense, but it actually is. And it's not consistent in the sense that, like, with rates being high now and like pretty much no refinances, you're not going to be making $90,000 as an appraiser today in today's market. But, go back like 6 months, a year, right? Like when it was like pretty much like free money to borrow and like everyone's getting refinances. He was pulling in like an insane amount of dough. So that was
how many houses a day is that he had to appraise to make 90K? That's pretty crazy.
Like maybe like 4 to 5 properties a day, which is typically impossible unless you have bridge other assistants. So before I came to the picture, like he was doing still pretty good money, like actually, pretty great money, but he was working like 12 hours a day and like pretty much 6 to 7 days a week, and he wasn't even pulling in like half the amount that he's making up to that point with my help. But then I was asking him, so like, why are you spending so much time on this? Like, what are you doing? Like, are there ways to improve this? And we kind of determined that the actual part that he had to do, the inspection process, that took maybe about 30 minutes because he was pretty good at that. And then he was driving maybe 30 minutes to each property, so you like give or take about an hour per property. But then the other aspect was he had to make a report, which you guys are familiar with, of course, but the report process takes maybe about like 4 hours to complete. Maybe even longer than that. So, if you're able to somehow delegate that report to someone else, your numbers pretty much become, okay, 1 hour of work to get the revenue from that report. So pretty much like one report could be anywhere from like $500 to $1,000 for residential properties in the Bay Area. So let's say $1,000 on the high end. If he's, spending about 1 hour per report, his hourly rate is pretty much $1,000 per hour. So it gets pretty lucrative if you can like stack the numbers and you can do like 5 or 6 per day, or even like 4 per day, right? 4 per day is already $1,000, or $4,000 per day. So it can really get like super lucrative if you're able to delegate effectively.
Yeah.
I think that could be another episode too, is the whole.
Yeah, that was kind of a tangent, I guess.
But I mean, you, Kenny, are the one who kind of influenced me. And I'm very close to signing up to the courses and trying to become an appraiser, just FYI. But I mean, I think it's a great, we'll kind of end this topic here, but I think it's a great side hustle, or even just, I mean, that the money you're talking about, Kenny, is like pretty good money. So
you had them at 90K. That's where you Tyler.
If you find me a side hustle that makes me 10K a month, I'm happy. So
definitely.
But the thing about that, what you just what you just mentioned, Kenny, was great. I mean, you're a serial entrepreneur. Your mindset is a lot different from, like, I guess, a typical investor, so forth. And the one takeaway that I got from what you just said was you kind of figure out the value of time, right?
Yeah. Definitely.
And you're like, why are you working 12 hours a day? How do we monetize this? How do we make that system better? And now you're like, okay, how do we come up with a system so that you can take back some of that time, then increase your cash flow, increase your income account? Because time is money and so forth. And I'm like, man, when you said 90K, then when you said he probably did like 4, 5, 6 houses a day and 12-hour days, then I kind of lost interest. I was like,
I'm not working that much.
I mean, it's good money, but in my life right now, I have 2 kids, I have a family. I'd rather spend more time there, and I'd rather be like you and monetize things and sit back and kind of hire smart people to do the work better than I could do myself and so forth. So anyways,
and yeah, I was gonna say that's what Closin's out there to do. I mean, this is pretty much like the syndication model too. This is what Kenny and I have done. This is what we do as a limited partner. You invest and you outsource a lot to others, and you hope the people that are running the ship know what they're doing and they get you a nice return. But so maybe we'll transition over to Closin, Kenny, which again is, and I don't know how knowledgeable our fan base is I don't want to call our fan base. We're not like celebrities or anything. Our viewers are
Tyler's fan base. Tyler has a fan base. He has groupies.
Our friends. I don't know how knowledgeable our friends are of the crypto space, but again, I from a high level, I keep calling it like the merge of crypto and real estate. But maybe Kenny, you could just give us like a high level explanation of
what is Closin?
Yeah, what is Closin? How about there we go.
Yeah,
cool. Yeah, so Closin is a platform that allows anyone to invest in part ownership of a rental property. So basically how it works is that we'll have properties on our platform that are rental properties, so cash flow producing properties. And then we break them down into smaller, I guess you can call them tokens, that are investable. And these tokens are going to be about $100 each. Meaning that if the property was $100,000, there'd be 1,000 tokens each, $100, and you can pay $100 to then get 1/1000th ownership of that property, which would then mean you would get, of course, ownership of the property based on that percentage, but you'd also get rental income based on that percentage of ownership. So, I mean, for practicality purposes, pretty much like syndication, kind of, but for a much smaller amount, because typically you invest, like 25K, 50K plus for syndication. You're probably not going to be syndicating for rental properties of like small residential properties. You're probably syndicating for like apartment buildings or commercial buildings, or generally more expensive properties in which that kind of makes more sense to syndicate. So Closin is that platform that allows pretty much anyone to invest for small amounts into their own share of a rental income producing property.
That's awesome, man.
Yeah, thank you.
And so I guess, I mean, and Sherwin, if you have any questions, just throw them out there. But maybe, so I'm curious, you, Kenny, and your team, so you're going out there, you're analyzing a market, you're acquiring the property, you're basically closing on the property in your ownership, and then you sell the tokens to investors, or how does that, or are you selling in the middle of, are you like trying to fund the deal through investors, or what's kind of trying to figure out how that all works?
Yeah, good question. Maybe just to take a step back, our long-term goal with Closin is to be a platform. So a platform in which other people can list their properties, then tokenize them, and then get investors to purchase properties through them. That's our long-term goal. But kind of the more short-term goal is that we're going to be listing our own property that we, of course, ourselves vetted, that are properties that I would otherwise invest in. And then list them on the property, NFT them into smaller tokens, then allow other people to invest in those tokens. So, the idea is that it was actually kind of sparked because I have this, relatively kind of small Facebook group in which I post my deals that I do, my residential property purchase I do. And a lot of people would always ask me, like, hey, can I invest with you, or can I give you some money and, you invest those funds for me? And it never really made sense for me to break up those deals because, if it was a small property, like let's say $100,000 property, $200,000 property, it was kind of more a headache for me to even include these people than it was just to do it myself. But I constantly got that kind of like feedback from people that wanted to, because they either didn't have enough, money to do it themselves, because these can be pretty expensive on the grand scheme of things, or they didn't have the time to actually, find these properties, make their own team, research the different areas. They wanted someone that had the experience to do it for them. But there's no real good, in my opinion, solution for that besides syndications. But those again require to have, much more capital than just say $100,000 or whatever. But so I thought like there was maybe a way to do this more effectively, if we could figure out the legal side of things, and we can figure out a good solution to kind of like allow this to be more practical than like our own kind of management system for this. So we determined that crypto through NFTs could be that kind of solution that would make this more feasible to do, would allow for this distribution to be occurring, and otherwise that we couldn't really deal with our traditional systems in place. So that's kind of like how this came to be and how we're proceeding with this for now.
It's funny because there's similarities to the syndication and this, because my story is pretty similar, where I got my first multifamily deal and I started telling friends and family about it, and they're like, well, can we invest in the deal with you and you guys do all the work for us? But like you said, instead of crypto or digital currency, it was like, it was 25 to 50K to invest with us and kind of bring down this multifamily property. So it's almost I guess it's like owning fractional shares of a single family home property.
That's right. Yeah.
And the currency is crypto or digital. So why digital versus just regular funds and regular money and so forth versus regular cash? Is there advantage before that or so forth? Or why did you guys choose that route versus just regular money?
Yeah, that's a great question. So I think the best thing about NFTs, or how I kind of see NFTs, like, I mean, everyone knows like NFTs will be used for like artwork and other things like that, which are maybe more speculative and maybe a little questionable to some aspect of things. But I think that NFTs are still a very good like receipt of ownership of an asset. So that's in my opinion what their best use case is a receipt to provide ownership of an asset. So I think real estate is kind of the perfect use case for that, meaning that you can have this NFT that would provide a receipt of ownership, and whoever owns that NFT then has receipt of ownership of the asset that's being backed by the NFT. So the main use case really is transferability. If you wanted to transfer like your own share of a syndication, it's probably going to be pretty difficult, if not impossible, to even like administer that kind of process. And there would never be really like an open market that would be easily transferable for that. So maybe you could transfer that somehow, but legally it's kind of difficult, administratively kind of difficult too. But the cool thing about NFTs is that there's a huge ecosystem available that's built on top of the existing blockchain functionality, that anyone can build their own apps based on Web3 technology if they want to. But the most obvious use case is like a platform like OpenSea, which is like an NFT marketplace, kind of like eBay to some extent, if you want to make that comparison, but pretty much a buying and selling of NFTs on this platform with anyone in the world. So you can take your NFT from the Closin platform, and you can go to OpenSea or to any other NFT marketplace, and then find a buyer, or then later find a seller for that NFT, making it very easy to transfer. So that instead of taking a month to sell your property on the traditional market of finding a broker and all that kind of stuff, you could potentially sell your share of ownership for maybe just even seconds or minutes or hours or days or whatever, but a lot less and a lot easier than it would be to transfer ownership of like a traditional syndication share.
So it's a little bit more liquid, I guess, in that nature. And you can because in the syndication, you're tied down for the contract, whatever it is, like 3 to 5 years, or until they exit or refinance and therefore and so forth. But then just to go back in your best layman's terms, what's the NFT for some of our viewers out there who don't know what an NFT is? And I'm sure they've heard it around NFT this and that, but they're not really sure what is it. So what's an NFT? Just they need to put you on the spot there, but just to go back a little bit.
Yeah, happy to answer. So NFT stands for non-fungible token, which is different than a fungible token, which So fungibility, I mean, it essentially means that like everything is the same. So a fungible token like Bitcoin, your Bitcoin and my Bitcoin, they're the same exact Bitcoin. Like you can transfer them and you can't tell them apart really. But a non-fungible token, each token is different. So think about like the different artworks, for example, you've seen as NFTs, like each artwork is different, right? Because they're different tokens. So like, your NFT and my NFT, they may be similar perhaps, but they're each unique and different. Compared to, again, Bitcoin or Ethereum, in which each token is the exact same token, right? There's no differences between them. So, I mean, with that being said, the main functionality and the main kind of use case of NFTs is proof of ownership, like a receipt backing something else. So that could be, like some artwork perhaps, right? Each one is different, provides ownership of that. Or you can have like an NFT of a trading card, for example, right? Like your NFT provides receipts of ownership of a physical trading card perhaps, or it could be used for real estate too. Like this NFT designates ownership of this specific property. So NFTs are primarily useful for backing individual ownership rights of individual assets. That's how I kind of see them at least, but there's many use cases too, even beyond that.
Oh, gotcha. Cool. So I guess just kind of going back to Tyler's earlier question, is a process almost similar like a syndication where, your team identifies a property and closes on a property and then accepts investments or funds, or is it almost like raising capital first before you close and then make sure you have enough capital in the deal to close it to for the down payment, for all the operating expenses, and is it a value add deal? Do you flip these houses or is it more turnkey?
Yeah, these are great questions. So these are our property is going to be pretty simple ones, at least initially. So pretty much turnkey ones that already maybe just need a few $1,000s in repairs, if even that. So pretty simple properties that are cash flow producing. So to answer your other question too, these are not going to be, it's not going to be like raising funds to then purchase the property, but we'll have the property and then we'll like NFT it, and then we'll allow people to invest in their share of it. And if we don't get enough people to want to invest in it, that's okay for us too, because we'll still have the property and we'll just, that's our goal to get more properties anyways, right? So that's totally fine too. But yeah, our goal is to, purchase the properties first, list them on the platform, and then have people invest in their ownership. And then, again, like I mentioned, the long-term goal is to have other people who already have their properties list their properties on our platform. And then same process, people can invest in part ownership of that.
That's awesome. That's
wild, man. It seems like the greatest advantage really is, like you said, there's a proof of receipt that you have ownership in a building. Is this a word? Liquidity. I was gonna say the liquidity of it. I was gonna say liquidability of it. I don't know if that's a real word, but it's cool that you could literally transfer your ownership or sell your ownership instantaneously. So I could like transfer it to a relative or something like pretty easily too, you think?
Yeah.
Or would it go? Yeah.
What we're working towards. I mean, I don't want to speak too much on the legal aspect of things because I'm not really trained in that, but my partners, they are attorneys and they're able to kind of like navigate that field better. But yeah, there are like certain SEC hurdles that we have to kind of get past. And like there's certain distinctions and classifications that will allow us to do that. But yeah, short answer is that there is a solution and we're working towards that solution.
Cool. Well, I got a question about, so on to kind of the returns. Obviously you are vetting the property, you're analyzing the property, the market, you're getting cash flow. If you have ownership of a token or tokens, are you getting paid like once a month, once a quarter? Does it just depend on how cash flows are for that time period, or how does the investor get paid?
Yeah, so with the context of this being a pretty liquid asset that you could trade on the daily, even, or on the hourly, I guess, if you really wanted to, we're thinking of the best way to really, because people could transfer their token and like on day 2, for example, and we want to make sure that there's no like weird discrepancies between like the income that you would earn as the holder for 2 days compared to the like 28-day holder, right? So we're thinking the best way to do this is a daily payout based on the past 30 days average of rental income. So like after maybe a month of history, we can then base the next month based on that previous month and distribute it based on that on a daily distribution schedule. That's kind of what we're thinking as of now. But again, we're still like relatively early on thinking of this. So actually, as some information, we plan to launch our first property in about a month. That's kind of our timeline now. but still kind of like tinkering with these last couple of things. But yeah, probably it's going to be a daily schedule payout.
Cool. Yeah. I mean, I think initially I thought that, investors in your platform would still be more long-term. I could be very wrong. I'm wondering, I would be curious if anyone's going to try and day trade this stuff, but I like, from my standpoint, if I were to invest, I would probably just, think long-term personally, but that's interesting that you'd have a daily payout. That's kind of cool. That's never been done in the syndication world.
Okay. Well, I was thinking the same way, Tiger. When you and I are like, we're real estate investor minded, where we invest for a long term, right? So this might be an opportunity. Oh, maybe we can be fancy day traders, and we're investing. What we know is real estate and not stocks, which I don't know nothing about. But and at the same time, kind of get introduced to the NFT crypto world, which I'm interested in pursuing and exploring, and I just haven't made the jump because I'm not comfortable. But I'm comfortable with real estate. I know real estate, and I'm curious to say, okay, so what's the process? Okay, we go on your website, we take a look. Do you guys give out like an offering memorandum? I'm talking like syndication terms right now. Like some type of report about the property with photos and I guess the game plan of how you're going to operate the deal, and so I'm sure there's like a pro forma numbers and so forth, right? Like target IR and cash and so forth, right?
That's exactly it. Yeah. So we list each property on the platform, and the individual can choose. So, I mean, we're going to only have one property initially, right? But the goal is to have many properties on here. And we're going to list all the properties on here, IRR, cash payout that's expected, photos of the property, summary of like the property in general, if there's a renter or not, the area, things like that, right? So we're going to list all of that. And then the investor can come to that and then determine if it's a good fit for what they want. So as much detail as possible we're going to provide to that, so that the investor can make an informed decision if they want to join that investment or not.
So is there in order to target the IR, is there like a game plan to exit the property after a certain number of years to get that calculation, or is it the idea to just keep it and have people kind of trade shares in and out and so forth?
Yeah, that's a good question. So my thinking is that if people want to get liquidity, they could always just sell their NFT on OpenSea, whatever. So, but it may perhaps also make sense for them to want to liquidate the entire property too. That may be a thing they want to do. So each NFT owner has voting rights. They can vote on more big ticket items, for example, selling the property, possibly for things like changing the property manager, things like that. So, we're Closin as a company is kind of like the platform for this, but we're not really operators in this once the investment has been done. It's up to the people that have invested into this to make their own decisions. So they can vote on whatever they want to, really, as long as there's enough support within the community of that property of investors to support that.
Yeah, that's great. Yeah. I mean, like in the syndication, the LPs usually don't have that control, right? Yeah. It's really up to GPs to kind of figure out, when's the best time to refinance, when's the best time to sell, and so forth. But always with investors' best interest in mind. So
definitely. Yeah, I think like in our case though, like our properties will be pretty simple. They won't be backed by loans. They'll just be cash purchases. So there's no refinancing concerns. And since they are relatively pretty simple single family properties, like there's not really going to be much decision making that's going to occur besides potentially selling in the future if that was an option, or potentially switching the property manager. Of course, you can think of things like repairs that come up, but we'll have a property manager handle those things on their own. For any like big ticket repairs, like maybe insurance will cover that, but for the ones that aren't covered by insurance, we'll have like a reserve fund for that too, which can cover those needed repairs, right? So I think there's not going to be too much that'll come up that really require their like voting or consensus. But I do agree with the thought that like, most investors probably don't want to be actively involved in this beyond a certain extent. Or if they did, they would want to have someone that was an expert that could then make decisions for them, which is why syndication exists, right? And that's why they have lots of value. But I think in our case, the properties are pretty simple and probably don't really need too much strategic thinking to operate well.
Yeah, great. Yeah, it's up to the investor's appetite, I guess, right? What type of investment they want to invest in. And that's why I love real estate. There's different types of real estate to invest in. And then your product is more of the turnkey. You don't really need value add work. And since you're buying all cash, the cash flow day one.
Yep.
Right. So there's no loan. There's no loan.
No mortgage,
so
just property taxes, insurance.
No more loan. And people like me and Tyler is going to keep refreshing the site and seeing our daily returns, go up and down. I guess that's interesting. I don't know if you guys have this out there. Like, is there a portal that people log in and kind of track their NFTs or and so forth?
That's right. Yeah. So they can view all their payouts, and they can make withdrawals from their portal to their bank account, and see how the property is doing and all that kind of stuff.
That's great. And then Tyler could transfer his shares to me.
It's all planned out, man.
Right before we vote to exit, and so he doesn't get the high IRR. That's awesome. I'm excited.
It's super cool. I was going to ask. So now we talked about how you get potentially a daily payout. I want to kind of go the opposite route too. And you mentioned this a little bit, but let's say you need to buy a new roof because there's a random hailstorm and it's going to wipe out all your reserves. I think I know the answer to the question, but I want to just ask you, Kenny. So does that just mean A, you won't get the daily payout because you don't have any cash flow? And then B, does the token value then decrease if you're like dipping into some like reserves, or if you expend all your reserves, or how does that work with major expenses, we'll call it?
Yeah. So whenever the reserve is deplenished or doesn't have like whatever the amount that we want it to be at, like we'll then use the funds that come in through rental income to then go back to that. So yeah, if it was such a big expense that there wasn't any rental income to have for the next month, then investors wouldn't get that payout because of that. But eventually that will be replenished, and then they'll start getting their payouts too. And your second question though about like the price of the token, I guess that's difficult to really say. I think maybe it would go down because of that in the short term, but then in long term it'd go back once the funds were back and people were getting their rental income again. But that brings an interesting question or interesting topic I want to discuss too, is that like real estate in general, it's priced because of course supply and demand, right? But with the context that it's kind of costly to liquidate real estate because you have to get a broker or whatever gets involved in. Like that's pretty pricey, maybe like 3% or so, even 6% maybe in total for a single family residential property. But it also takes a while too. Like it's probably going to take you at least a month to liquidate one single family residential property. So I would argue that if there was an exact same asset that didn't have those issues of liquidity and didn't have the issues of costliness, I would argue that exact same duplicate asset that didn't have those issues would have a premium over the corresponding asset that had the issues of liquidity and took a long time to sell it and was expensive to sell, right? So that's pretty much what each of these NFTs is, because you can sell or trade the NFT in theory instantly without any like 3% fee when you liquidate your NFT, right? So I'd argue that NFTs would have a premium on top of what the underlying asset of real estate would be. Plus also NFTs are kind of bubbly too. I mean, that's just kind of like how they are now. So I would argue that there would be some sort of premium, which would also further incentivize people to want to list their properties on the platform, because they could get not only a pretty quick sale, but they could also, since it's going to be NFT'd, they could probably get a premium on their property too than they would if they sold in the traditional market.
That's great. Yeah. So, and when you say payoffs, it's an NFT or digital, right? And I guess like for someone like me, hey, so how do I monetize it and get my cash, turn it into cash? Turn the NFT into cash because, my wife's like, hey, we need more diapers or something. I don't know.
Yeah, sure. So, I mean, by holding the NFT, you'll then get like your daily payouts of like whatever the rental income was. So that's one form of like how you get cash from this. And then the second form, of course, is actually liquidating it, right? So you can go on NFT marketplaces like OpenSea, and then you can sell that for the equivalent of USD essentially, and then get your cash that way.
So would the daily payout come to your crypto wallet in like a form of like a stable coin like USDC or something, or okay?
Yeah, most likely.
So you get paid out in crypto, Sherwin. Just I'm giving Sherwin the info here too. So
because I
would still get paid out in your crypto wallet. You would then have to convert that into US dollars, however you would, however you plan to do that.
Gotcha.
Coinbase or whatever.
Yeah. Gotcha. And that crypto wallet's I guess your initial capital contribution is elsewhere or part of that crypto wallet, so you can essentially trade or exit your profits and leave your minimum that you put in there and still be in part of the deal. Does that make sense what I'm saying? Or
I'm not sure if I'm fully following that.
Yeah. Like I guess your payout on top of your minimal whatever your initial contribution, you still have the initial contribution in the deal, but your excess payout you can liquidate exactly. Okay. That's right. Sorry, I'm like
we're teaching Sherwin. I'm not very knowledgeable either, but we're teaching Sherwin. Sherwin's a novice for sure.
Yeah,
no worries at all.
Yeah, so I guess that's great. So you have the property, you look at it online, you're like, okay, great, I want to invest in this deal, but it's like someone like me who doesn't have a digital wallet set up. I don't know how to set up it. How easy is that process? Where I know that what the minimum is, and converting dollars into crypto. Is that something that your company kind of takes care of, or me as an investor have to set that up beforehand before I start to invest with Closin?
Yeah, that's a good question. So I think for our first initial property or properties, it's going to be probably not utilizing crypto as effectively. It's going to be more so like a Web2 platform initially, just to kind of get things smoothly set up for us. So in that case, it's going to be very simple for you. It's going to just be, your US dollars to purchase the property, and like we're going to be having tokens effectively, but it's not going to be really Web3 tokens. But then for our future MVP launches, it will be, yes, much more crypto enabled, in which case you would have to do a little bit of legwork, but we'll make it very simple for you to do that. Like we'll pretty much guide you and make it very simple for you. The cool thing, I'm not sure if you're aware, like there are like stable coins, which are effectively like 1-to-1 US dollar to that crypto asset value. So like, a lot of people are worried about the fluctuations of Bitcoin or Ethereum or those other cryptocurrencies. But if you use a stable coin, it's always going to be $1. So it becomes a lot less risky from that perspective. You don't have to worry about, oh, what if I, bought a bunch of Bitcoin from my Coinbase account, but then I transferred it. And then when I transfer the next day, like it was, half the value now, right? So you don't have to worry about that with a stable coin at least. So we'll make it very user friendly for you as the non-crypto expert to get into this.
Well, yeah, it's just converting your dollars into digital, just 1-to-1. So that's great. Yeah.
I think I have one more question for you, Kenny.
Okay. Awesome.
And then I don't know if Sherwin can ask anything else, but then I have a fun part at the end. I just thought of it right now in my head. But so I guess two questions. So the minimum investment, you think it's going to be about $100?
That's right.
Okay. So I think that's obviously a very low barrier to entry for most people. And then my follow-up to that is like, do you have to be accredited? Do you have to have certain qualifications to invest? Who can invest in this platform and with, in these properties with you?
So long-term goal is that anyone can invest in this, meaning that you don't have to be accredited. You can be, not even from the US, you can be from any country in the world, and it can be any person can invest the equivalent of $100 in crypto for these properties. But in order to actually effectively do that in regards to the SEC, you have to have certain classifications. I think the one that we're aiming towards is a broker dealer license, I believe, to allow us to do that in the future. But that takes some time. So we're kind of doing things in smaller steps initially to prove the concept and to be able to do this. So for our very first property, which will be in about 1 month, it's a little bit difficult for people that don't actually know me personally, or, don't have a connection with me beforehand, or who are not accredited. So the first property, you have to either be accredited or you have to have some connection with me before closing. So it's going to be pretty limited.
Like a 506B structure.
Effectively, yeah.
So is it also called 506B in your world, or is this a different?
It's called a 506K because you got to know Kenny and be in the invite list.
The 506K.
Exactly. But yeah, I probably can't speak the legal stuff too well, but effectively it's that kind of limitation, right? So the first one's going to be a lot more limited, but as we kind of progress with this, we'll make it so that it can be easier for anyone to invest with us. And the goal eventually is to make it so that anyone, anywhere can invest with us. But taking these step by step at a time.
It's I got another last question. We're gonna have like a bunch of last questions, but I guess what's the difference between Closin and REITs, like Fundraise and RealtyShares and so forth? Because REITs is another way to you're buying kind of essentially shares into you're buying shares into a company that owns a bunch of different real estates, right? Like a portfolio of real estate, if I'm like explaining it correctly. But what's the difference between Closin and those type of platforms?
Yeah, very similar, and like grand kind of like concept of investing in real estate and being able to easily liquidate if whenever you want to, because real estate investment trusts, at least the public ones, you can like sell it on the stock market, right? But the main difference, I would say, like what you even said yourself, is that when you invest in a REIT, you're investing in a company that owns many different properties and employs many different employees as well, and has lots of other maybe not super relevant costs that are not relevant in regards to real estate. But when you invest in close-in properties, you're investing in individual properties that you specifically choose yourself, and you're only investing in those properties. You're not investing in like the CEO's salary or anything like that, right? Or a bunch of marketing people or administrative people, whatever. And traditionally, REITs have performed relatively well, but typically not as well as actual real estate itself. Like, I mean, for us, we can get not too difficultly, like 15+% returns, if not even much higher than that, by investing in real estate properties individually, right? But REITs are typically like high single digit returns, if not very low, like in the tens maybe. So of course, there's different risk factors involved, but I would say when you invest with closing, the main difference is that you actually invest in a property. Whereas if you invest in a REIT, you're indirectly investing in properties, but it's not as direct.
No, it's great. I have another follow-up last question.
Do it.
Like, I guess how are the gains taxed? Is it like real estate where you can get depreciation, cost, all that? Because I know in the REIT you don't get the same real estate tax breaks, or that real estate tax breaks that you get from actual real estate. So how are the gains taxed if these are like NFTs and
great
from
question.
How
we do it is that each property is purchased by an LLC. Like an individual LLC owns one individual property, and then when you purchase an NFT of that property, you're actually purchasing like one share of that LLC. So by proxy, you then, because you own the property, or you own the LLC or a part of it, you then own the asset within the LLC, which is that one property. So it's the exact same thing as if you were to yourself own an LLC of a property, or just own a property directly. So you get the depreciation benefits and all that. So most of your income is probably not going to be taxable, because a lot of it's going to get expensed away by depreciation, right? So, but yeah, to answer your question, it's just like as if you were to own a property yourself.
Love it. And that's how like a real estate syndication is sort of set up, where an LLC, we have a different LLC for each property, and what you're actually buying shares into that LLC that owns that individual property. Exactly. I love it. See, that's my language. I'm done.
There we go.
Let me bring up my crypto wallet now. And
we'll get Sherwin into crypto shortly.
Yeah, we're definitely gonna do
it. The last thing I want to throw out there is a little bit of a fun segment, but it's more so just a would you rather question. And Sherwin can answer this one as well. But okay, Kenny, you ready for this?
Yeah, I'm ready.
Would you rather invest $50K into Bitcoin or a single family turnkey property, or a third option, a value add multifamily in California? You got three options, 50K into one of those assets. What are you choosing?
That's a tough question. I already have a decent amount in Bitcoin now. So because of that, I probably wouldn't want to put much more into Bitcoin. I would probably want to put it more so in real estate. So then it's the question of, which real estate option would I choose? I have no experience in actual value add property. So if I was to invest, it'd probably be through some sort of syndication or some sort of like partner that would help me do it. But if it was just myself, I would do what I'm like competent in and capable in, and have experience in doing. So just probably a traditional single family property that was cash flow producing, and call it a day like that.
There we go. Huntsville, Alabama. All right, Sherwin, what are you choosing?
Why wasn't closing part of the option?
Well, I kind of indirectly tried to make it seem that way, but
with the Bitcoin, well, I know nothing about Bitcoin, so I don't know if that's the best investment choice. I mean, it's interesting because it's what Kenny alluded to. It's where are you at your state of your life right now, and your investment portfolio right now, at the stage of your life right now. And for me, a single family home probably doesn't make sense. So, and I'm a value add guy because that's what I'm comfortable doing. I may do that for a living. So I'll probably invest in a syndication, one of your syndications, for 50K, so I'd have to do all the work for a value. I think that's what I'd probably do.
There we go.
If there's a fourth option, if closing was an option, maybe that, right?
So
there we go.
I will say, I bought some Ethereum today
because
it's at 20. It was in the 2200 range today this morning.
Oh wow. Okay.
Anyways,
yeah. Tyler would be the single family one because I know he wants to buy a house now, right?
Well, that's different. I might buy a primary. I don't consider that investment though.
Oh yeah, you can't get, and for that price, you can't get a primary.
I don't know what you can buy for 50K in the Bay Area.
So yeah, it's not even a down payment for anything.
Cool. Well, I mean, I think that's it from our end. I don't know any other questions from you, Sherwin, before we wrap this up. And I also want to make sure Kenny can plug his website and everything. And anything else that you wanted to touch on, Sherwin?
No, I mean, I actually was gonna end with like, how can our viewers or listeners get in contact with you? Can you learn more about Closin and what's the best way to just get more information about that? Maybe sign up in some lists and maybe get on that 506K list.
501K, yeah, for sure. So Closin's website is just closin.com, closin.com. We have like a wait list on there. You can sign up for there, give your email. I'm always available to chat. I love to chat about real estate, crypto, investing in general. So you can reach me on LinkedIn. That's one good option. Just my name, Kenny Schumacher, or you can email me too directly, just kenny@schumacher.jp. It's my website is schumacher.jp. Happy to always talk about any of this kind of stuff. So feel free to reach out.
Yeah, awesome, we'll be sure to put Kenny's contact information because they're probably wondering, how do I spell Schumacher?
Sure, yeah, sure.
So that's a German last name.
German last name,
right.
Domain.
And I got a German last name too.
Yep.
People never think that we're Japanese until they see us.
I gotta start plugging that I'm half German, half Japanese too. So I meet smart people like Kenny.
Oh man. Yeah. Well, Kenny, it was awesome to chat today. Thanks so much for your time. I know you're a busy man running around there and buying properties and building a platform and, really evolving the real estate and crypto world. So thanks for your time today, man. We'll make sure to put your description or your information in the description below, and maybe we'll have you on another episode talking about the appraisal world once you become an official appraiser, which you pretty much are.
Getting clear, yeah.
So, man, thanks so much for your talk today.
Yeah, my pleasure. Thanks for having me.
Good. Thanks, Kenny.